My colleague is also standing by, Effiong Ekop. Effiong Ekop is actually on the island today, visiting the exchange and also doing some reports across the board. Now, Effiong, if Effiong is ready, we could talk to Effiong now and look at what is playing out on the global space. Effiong Ekop, are you there?
Tolu, I can hear you loud and clear. I am here on
let's start with this OPEC cut thing and what it means for the entire oil market. What is your reaction to it before you, of course, will wrap up with the market performance for the day?
Well, some people that I have spoken to, they have great reservations for the output cuts and saying that it will affect living standards of people both domestically and internationally. But of course, they don't have anything, they cannot prevent that from happening, in the sense that the countries taking these actions, they are powerful nations and they supply huge quantity of crude to the world market. But the problem concerns more about Nigeria and Nigerians, in the sense that our refineries are not producing, and so we are left with buying crude products as the international price levels. And so whatever price is given up there by OPEC members affects those who will buy here in Nigeria. That's what many of them are saying. And we know that OPEC members are proposing cutting output even to a point of or as much as half of a million barrels per day. Saudi Arabia wants to cut about 500,000 a day, and that of Qatar, even Russia. And so it is something that many of the nations have decided to do, and the common person on the street who will need to buy the end product seems not to have ability to stop anything from happening. The only thing that they have said is to plead with the Nigerian government to move on and increase the pace of putting infrastructure, energy and gas infrastructure in the country, and let the refineries begin to work. Solu?
Well, indeed, we are yet to take advantage of our gas reserves, both proven and unproven reserves. That is something that is very important, and infrastructure, which you mentioned, is what can help address that. But as of today, the price of crude is reacting positively to this development. What do you think is responsible for that?
I think before I came up here, I had checked my computer and I found out the barrel of crude was selling for about $85, in the early bargain this morning. That's really on the high side when you know that we were not selling at that price before. And if this cut goes on as these nations are proposing, it means we may target $100 per barrel anytime soon. The war in Ukraine and the relationship between Russia and Ukraine and even EU is also coming into the decision, as some analysts have been able to say. Because the US wants oil price to stabilize. In fact, a lower oil price the US wants. But Russia wants it, to go up. And some Asian nations also want the price of crude oil to go up. So there is conflict here. Of course, you know that to some extent, oil and gas products seem to be used as, weapons of war. And we cannot say that it is not what we are, beginning to witness now. But back to Nigeria, it is incumbent on our domestic government to take measures to help the ordinary citizens to survive whatever happens and comes from the international markets to affect us. The best way to do is to keep our 4 refineries working. And luckily for us, a private refinery is about to resume work. That means we should be able to refine crude products, domestically, and then be able to mitigate whatever problems that we are having from the international markets.
Interesting stuff there I think enough with the oil and gas space. It will be a discussion for another day because many have said the refinery you're talking about, that's the Dangote refinery, might not be the answer to all our problems. It might help, but it's not the total answer because Dangote also has to buy crude before he can refine. Let's wrap up with the performance of the market today. You're in Marina. I know you're still going to get those figures for us. But what we have here, the market is down. Gainers, we have Square Motors, we have NACO, Link Ashore, Suno Air, Suno Ashore, we have WAPIC. Losers, we have Multiverse, Eternal Oil, ABC Transport, NGX Group, and ICO Insurance. And what is your reaction to this performance?
Since yesterday, the market showed this character that we are going to stay negative for some time to come. Yesterday, it was very deep as 1.22% in the negative side. So today, again, coming negative. It is a continuation of the depression that we had seen in the market yesterday. It was caused basically by what you call profit-taking, by investors. A week ago, before we ended on Friday, market went up more than 2%, and that created opportunities for those who needed cash to apply, to take advantage of that. So I think that is exactly what they are doing. And with the expectation that next month we shall inaugurate a new administration for the country, markets, many people seem to, play the market on the sidelines. In other words, they do not want to bring huge funds to the market. And so those of them who still know some fear somehow, they want to take profit and then take back some money from their investment. And so we are going to see more of profit-taking from the market between now and the time that we have a new administration in the country. So when that is done and then the coast is clear, then the market will begin to chart its own course and investment analysts will decide which way to go. So no?
Interesting stuff there. But maybe let's do some projections as we move. Already we're in a new quarter and a lot is being expected with what we saw. Analysts will say that we still have to tread softly. We expect a new government, like you said. We expect the cabinet to also be formed, and we expect that will be done very quickly, according to what we've heard. So in your thoughts, do you think that investors will soon move away from that fence? They always like to sit on the fence to know what is happening over there and what is happening over here.
This second quarter will not be much different from what we experienced during the first quarter, in the sense that the cash crunch that had affected investment, both big and small, is still around. You may say that it has been mitigated, but largely many people still stay, on long queues in the bank, to get money. Those of them operating the large businesses, they complain a lot that they have not been able to fund their businesses. And even smaller businesses had collapsed between December and the month of March. And so all of these shut down monies that could have gone into investment market. Those who even have huge funds, they are unwilling to release such funds, to the market. Why I say that we are not going to see much difference this second quarter is that politics that we had played, we have only conducted the election and we have known the result. We've had presidents-elect. Until they are inaugurated into the office and then the new administration starts, which means by the month of May, do you understand? Then the whole of the second quarter would have ended. So from January to June, the economy is not, predictable where it could go. And so investors are not likely to play the market in a big way. Even look at it, as at this time, we were not able to, get annual reports from many quoted companies, their performances of last year. And so you can only count the number of companies that have sent in their reports to the market. Why? Because things have changed, and majority of them, majority of the operators of the companies are looking at so many things before they do and take certain actions. And so the second quarter will be like the first quarter, on a shaky, levels. So the market will still be played largely in the weak territories. Tolu?
Ekop, my colleague, thank you so much. It's good to always see you on the other side. I'll see you when you get back to the studio. Stay safe.